Thanks, Ron. Gee, 30 years seems like a lot, but thanks, Ron. Enjoyed the ride. Look, really excited this morning to have Paul Zahra with us. I think a lot of us, including myself, first met Zahra when he was running DJs. So it's been a while since then, but it's a bit welcome, Paul. So just on Paul's background, Paul's the CEO of, as Ron said, of the Australian Retailers Association, Australia's oldest, largest and most diverse retail body, representing $360 billion sector, which employing 1 in 10 Australians. Quite extraordinary. As a leading figure in Australian retailing, Paul has worked in the industry for over 35 years and, as I indicated, previously held senior corporate roles at Target, Officeworks and David Jones. So with that brief introduction, Paul, let me hand over to you and welcome this morning.
Thank you, Adrian, and really pleased to be here. And as you can see, I'm coming to you live from the Queen Victoria building here in Sydney. We'll make sure the customers are not too raucous and they're well behaved so I can get through my 30 minutes with you all today. So firstly, I'd like to acknowledge the traditional owners of the land on which we work, learn and live, and I pay my respects to their elders past and present, and also recognise First Nations peoples as Australia's first traders with a sophisticated network of trading paths that have enabled the exchange of goods, knowledge and culture for millennia. Now, I'll start my brief overview of who we are, and Adrian sort of mentioned that in the opening piece. We are the oldest, largest and most diverse national retail body, and out of the $360 billion sector, since my appointment to the ARA, we've almost got about 2/3 of the retail sector now as ARA members. So all the major retailers, Coles, Woolworths, David Jones, Chemist Warehouse, Officeworks have joined the ARA. Now, albeit the majors have given us certainly financial backing and support, but equally the small and medium-sized businesses make up about 95% of our membership. So it's an important membership base. Now, retail represents approximately 4.5% of Australia's GDP. And at the ARA, we do represent the majority of retailers. And our role is really to inform, advocate, educate, protect and unify the retail sector. So we do that in a variety of ways, from direct advocacy to government through to media and marketing campaigns. So I'm in a really unique position because my role sits across, such a diverse group, from hairdressing to hardware, from fashion to food, but equally relationships at the federal, state and local level when it comes to government and advocacy. We also support our members in training and development through our Retail Institute, which is a registered training organisation predominantly funded by government. We help members with recruitment through the ARA's talent registry. So we do see ourselves as a one-stop shop. Since my appointment, we've also really beefed up the strategic partnership. So we've really got a data-rich network of partners in Deloitte, MasterCard, Salesforce, Afterpay, American Express, Rest Superannuation, just to name a few. So I started as the CEO at the ARA just as the pandemic hit in 2020. So we've been in crisis management much of that time. I thought I was stepping into an ambassadorial role with long lunches, but that was clearly not the case. And in fact, I've had to work pretty much 7 days a week since my appointment up until the last month, where things are slowly starting to settle back into some sort of new normal, I think. And we've very much been living in a permanent state of disruption and crisis management. If you look at the top line numbers for the retail sales overall, the sector is doing quite well. So the ABS came out last week, as you know, with the February numbers, and it showed that sales were up 9.1%. Now they're terrific numbers, of course, and the major categories that are doing well are clothing, footwear and personal accessories, up 17.8%. Of course, people now have a reason to be out and about, to go to events, to go to parties and to entertain, and that's had a significant positive impact on the fashion industry. And household goods continue to motor along, up 8.1%. And the poor department store sector, this is the first time we've seen an increase in many months. I think it's about several months of consecutive decline, but they were up 5%, which is pleasing to see. So despite the impacts of Omicron and staff isolations, it hasn't really had much of an impact on consumer spending, certainly at the top level. Having said that, there are some sectors of the retail industry that are continuing to struggle. The biggest concern remains to be CBD retailers, in particular small businesses with largest impacts, as we would all know, in Sydney and Melbourne, with really low occupancy rates. Our capital cities are still a far cry from their former selves, We've seen much of a lift. We haven't seen, much of a lift in terms of office workers returning. The borders are open, but tourism will take some time to ramp up. And of course, you know, many Australians are now choosing to work from home, and that's really been a trend that's been escalated or accelerated rather through the pandemic. So we do think we will probably fall on a hybrid model, and that will have a huge impact on CBD retailers. If you go for a walk through Sydney or Melbourne, you'll notice plenty for lease signs. So even though the vast bulk of COVID restrictions are gone, foot traffic through our major cities is still quite low, and it goes across the board. It's not just restricted to Sydney and Melbourne. They're still impacted in all the other states, including WA. So it is a close watch and of great concern. Having navigated the worst of COVID, retailers are now dealing with the fallout from a war on the other side of the world, and the cost of doing business is going up due to inflationary pressures. So weaknesses have been exposed in our supply chains, and staff shortages remain an ongoing concern. 59% of retail businesses expect to increase their prices more than usual over the next 3 months. That's the vast majority of retailers saying that they'll be taking prices up. And supply chain costs have increased sevenfold since the beginning of the pandemic. So businesses are having to order stock much earlier than they normally would to buffer in delay times. And most retailers, and many of you would know this, have moved from just in time to just in case. So there's a tsunami of issues at play at the moment, and we've all seen the impacts that are flowing through in terms of increased prices for everyday goods. We're at a critical point in the political cycle with the federal election just a few weeks away. The budget last week provided a lot of short-term gains, supports for cost of living, a cut to the fuel excise, and some tax offsets. Those payments are set to flow through the retail economy, but the long-term outlook is a little bit more uncertain. If there's a change of government, of course, there'll be another budget handed down later this year, so we'll have to wait and see. If we look ahead to the opportunities for retail, a lot of it lies in the digital and innovation space. The acceleration of digital trends is one of the positives to emerge from COVID. And we've seen a powerful and permanent shift in the way people live, work, and how people purchase the goods and services that they need. Online shopping is on a powerful trajectory. Sales are up 22.8% in February over the previous year. And more people are obviously choosing to purchase the things that they need with a few taps of their fingers. The pandemic highlighted just how important it is for retailers to have an omni-channel strategy, and businesses that were hesitant to make that leap into the digital space either didn't survive or they've had their hand forced by COVID as lockdowns prevented trade, obviously, in physical stores during that time. So we've seen a massive shift in mindset in retailers from seeing digital to being, a disruptor to now being an insurance plan. So that's been a really fundamental shift that I've seen over the space of the last couple of years. And pleasingly, now we've seen many small businesses in particular set themselves up as omni-channel retailers, and investments in digital and innovation are very much now at the forefront of a retailer's mindset. Technology budgets allocated to cloud solutions have grown significantly since 2020, accounting for about 20% of spending on average for retail businesses. And we've also seen an announcement in the last week's budget of $1.6 billion in tax relief for small to medium-sized businesses to go to digital and upskilling their employees. And that's a welcome by the retail community. It's really important the small business are not left behind and that they're supported to keep up with the rapid rate of innovation. There's also been a dynamic shift in consumer behaviour over the past couple of years, with people becoming more values-driven when it comes to their shopping. Consumers resonate more strongly with the brands that reflect the social and environmental issues that are important to them. So issues like sustainability and climate change are becoming key issues for businesses in terms of their customer relationships. We've seen businesses make some great strides in terms of sustainability and the various strategies they've put in place to get towards net zero emissions. And the ARA are really proud of this. We've led and have played our part in developing a net zero roadmap to help the industry and small business take that necessary steps in the sustainability journey. Climate change is the next big global disruptor. It's on our doorstep, and we're seeing it play out before our eyes with the recent floods in Central Australia, New South Wales and Queensland. The business community is doing its part, but we'd like to see greater government action. There remains enormous opportunity for growth in how we as a nation address climate change and sustainability challenges. We'd like to see more measures to address business adaptation and resilience to the impacts we are already experiencing around natural disasters such as flooding and bushfires, as well as educational measures for business on sustainability adoption. Staff and skill shortages is another area of concern we're advocating to government. As of February, there were 29,100 job vacancies in retail. We continue to be hampered by close contact isolation requirements. And if you're a household contact of someone with COVID, you have to isolate for 7 days, even though you're testing negative and showing no symptoms. So it's something we're advocating, obviously, to change. That's having an impact on small business in particular that don't have the resources to continue to trade. Some having to reduce their trading hours or close some stores temporarily altogether because their staff simply don't have the staff available to fill those last minute shifts. And we've been calling for the close contact isolation requirements to change so that if you're testing negative and showing no symptoms, you should be able to go back to life as normal. We're seeing international students are starting to return and a gradual build-up of skilled migrants, but there are still many gaps to fill in the retail workforce. So as it stands, retail remains resilient. We've weathered the worst of the pandemic impacts, but challenges remain with so much global uncertainty. Now, I'll leave my remarks there. I think back to you, Adrian. Happy to answer any questions that you or the audience might have.
That's great. Thanks, Paul. A pretty comprehensive run through and some interesting things I wouldn't mind sort of digging into a little bit deeper on as well that you've highlighted. But let me start with something that's kind of more personal. So just can you share with us your transition from the executive roles you held in ASX-listed companies to representing the interests of Australia's retailing sector?
Well, look, that's a really good question to start with, because one of the reasons why I took this role on, there's a bit of history because the ARA there is another association called the NRA, and the NRA and ARA tried to merge to become one association in the country. That merger failed. It's a Queensland operated association. They're a much smaller entity to what we are. And I was approached originally to actually chair the board for the ARA. And in fact, at that time, the CEO was stepping down, and I was asked, would I be interested in taking on the CEO's role? Now, the reason why I took it was to bring a spotlight to the industry. We are the largest private employer, but equally because I wanted to, in my next role, I wanted to make sure I took something on that had some learnings in it for me. So the learnings for me are the government side of managing from advocacy and lobby perspective. So the transition really moved from managing an investment community to managing government and membership. So different cohorts, same issues. Everybody's driven by self-interest. And I guess for that reason, the transition's been fairly smooth, only because learnings for me, but running a department store meant that I was across every category. And this role speaks to my strengths because I have a sense of all the different categories that are available in retail. So that put me in a really good place to head this up. I'm just hit 2 years and I'm enjoying it. It's been exhausting, but I'm really enjoying the role.
Thanks, Paul. I like your comment about always backing self-interest. So works for investors as well. So just in terms of more specifically about the ARA, so how do you best represent the interests of your members?
Well, look, we do it through data. So we do lots of surveys to make sure, we are a broad church. We go from hairdressing to hardware and from fashion to food. So you're not going to always please everybody, but I tend to, when I'm talking to government, I try to solve their problems. So when you talk about advocacy, it's no use going in asking for government funding or advocating for something that's not solving the country's issues. And a good example right now, we are a registered training organisation and we're used to government funding for training for unemployed people to bring them to that first, to what we call retail ready. Now, the interesting thing is unemployment rate has dropped to such record lows. And there's not a lot of interest in training because, of course, everyone that's got a job right now wants a job, has got a job. So we're looking at other ways to solve problems when it comes to either climate change or to do with all sorts of types of technical regulations. So it's looking for mutually benefiting type opportunities that actually we've been successful of. And particularly managing through Victoria, that's worked well for us, and being able to be through the lockdowns was to able to keep the online trading happening, because that allowed the government to get their health restrictions in place. They were initially not planning to do that, but through my knowledge and experience, I was able to convince them otherwise. So it comes back to looking for mutual opportunities.
Thanks, Paul. So just reflecting on the last 2 years, and you'd alluded to a number of these things in your opening comments, but can you just reflect on these last years and share with us what you see as some of the permanent impacts for the health crisis? I mean, I think about retailers and being incredibly nimble and being able to pivot and change and deal with the current crisis that's coming.
Yeah.
But I'm just interested, some of these would be permanent, and just your reflection on those.
First up, Adrian, I'll probably reflect on the pandemic with some great frustrations. We had so many inconsistent approaches from government when it came to lockdowns, reopenings, vaccine requirements from the states and territories. Heaven forbid we ever go through another pandemic, but we need to have a nationally consistent framework in terms of the triggers of the lockdown and what we regard as essential retail, because the lockdowns meant different things in different states, and it just added cost. So that was a massive frustration when I reflect. For a retailer with a national footprint, this just does your head in. In terms of the lasting impacts from COVID, it has to be the acceleration of digital trends. I mean, by my assessment, I reckon a decade's worth of trends happened in the space of 2 years. We essentially saw that happen. Things like, the acceleration of contactless shopping, click and collect, direct to boot deliveries, people embracing new methods to get their everyday items. And in the innovation space, we're seeing things like augmented reality on the rise. People can see, what a new couch would look like in their living room, or what they would look like wearing a new shade of lipstick. I mean, these are all things that were sort of Jetsonian or futuristic that we sort of have seen played out very quickly. And social media particularly is playing a greater role as part of the integrated shopping experience. So all of these things were in their infancy at the beginning of the pandemic, but are now becoming much more mainstream. And I think we've got COVID to thank for that.
Thank you. So just on that, with respect to some of those changes, and some of them are obviously very structural, so there are potential opportunities for your members as well. So how do you think they're reflecting on those?
Look, I think they're reflecting as I mentioned in my opening commentary. I think, traditional retailers saw digital as being a real disruptor and a true pain in the backside, because no one was really clear on getting a return. But I think, what they see it now is truly an insurance plan. Certainly not the way of the future. It's happening now, and they need that to remain relevant. The digital, and I'm seeing, significant shifts from, and we're seeing that obviously people, generally retailers are reducing their physical footprints and investing heavily in digital. And that's always been my feedback to retailers from a planning point of view. But that's been really accelerated through the pandemic, and that's what's playing out right now.
Thanks, Paul. You made a couple of comments about the governance, but they played a role. So, but how important was the government's role in this period for your members?
Yeah, look, COVID was no doubt an incredibly difficult time. Overall, we've come through it okay. I think schemes like JobKeeper and JobSeeker, supplements were lifesavers in terms of keeping people in jobs and business afloat. We saw, particularly with JobSeeker, I mean, that money, one thing I've learned in this role, every dollar you give to a minimum wage earner or the unemployed, 70% of that ends up in the retail economy, of course, because people spend the money that they've got, they don't save. It's certainly stimulated the economy, and I think you've got to credit the government for that. The retailers were really beneficiaries of that stimulus. The greatest frustrations were the inconsistencies I spoke about, and I think even now we've had inconsistencies with the reopening. So depending where your people viewing this today, I mean, there's masks are a really good example. They're only encouraged for customer-facing staff in New South Wales. They're mandatory in Victoria, while in Queensland, retailers don't have to wear them at all. So as we've opened up to overseas, we need to have all the states aligned, and it doesn't make any sense for there to be different rules in different states. We're one country. So, that's really, that's my reflection. I think, I don't think any Australian realised the power of the states, and I think that's sort of come through as we saw each jurisdiction making up their own mind.
Yeah, no, I have to totally agree with that. The differences in approaches was extraordinary. So living in Victoria, we copped most of it, but anyway.
You certainly did.
I'm just stepping out a little bit now. So how important is for you to understand how other retail markets, whether it's geographically or other kind of forms, and how they're evolving, how that is important for you in terms of you supporting your group?
Well, it's terribly important because, of course, my world's been department stores, and, the beauty about the department store model is truly international. So, we don't really create new trends here. We follow, because of the size of our market being so small. So it's incredibly important. And it is important that we're across the industry. It goes across all types of retailers, not just department stores, supermarkets, specialty stores, but it's important that that the industry is evolving all over the world, and we're really an amalgam of the US and Europe, and that's where generally most Australian retailers would get their inspiration from. One of the great things about the ARA is our network of strategic partners. So we're really we're certainly quite in step and in tune to what's happening with American Express and MasterCard as they provide us with insights. Afterpay most recently, and same with Deloitte and Salesforce. So they provide us with lots of insights that we share with our members, particularly around what's happening in retail, both here and abroad, when it comes to payments, research, data, and innovation. As a retailer, you need to have the latest insights at your fingertips so you can be better informed about the business decisions you make.
So Paul, just reflecting on that for a moment, are there some trends that are relevant that you can share with us here today?
Well, look, I think there's all of these are unprecedented sort of challenges, and I sort of hate using that word, but it's true. The role of technology has never been more important, of course, and it's an area that's continuing to evolve. I think the new one really is around supply chain. I think during my retail history, it was really always about offshoring things, getting them at the lowest possible price. There was not really a big favour about Australian made, but there's certainly been a significant move around technology continuing to drive improvements in supply chain, in the way businesses procure their goods and distribute them to stores and customers for offshore stuff. But also there's been a significant move towards retailers thinking much more locally around what can they actually produce in the country, and even some retailers in store, so they're actually not relying on overseas merchandise as much. So systems and software will continue to evolve, and it's up to retailers, I guess, to embrace those challenges. Social media is obviously has got this major trajectory, people shopping directly from Instagram particularly. We're seeing lots more examples of automation. And what's interesting is technology has certainly been the big driver. Data in the insights, I think, and innovation through technology has been the major trends. And we're just seeing that happening at a supercharged train speed. So it's a continuing watch this space. But I think most retailers now are sort of jumping in heads and all, and not waiting for things to be proven before they can actually adopt them. So we're seeing retailers adopt digital in a much bigger way than they have in the past, purely to survive.
That's very interesting. So something that investors would be very familiar with in chatting with a range of industries is some of the underlying inflationary pressures, whether it's with logistics or it's just other pressures, whether it's input costs that are relevant. So what visibility do you have on this, and from your members' perspective? And you mentioned before about, I think you said 59% of them planning price increases. So it's a pretty compelling number itself. So how are they managing it more generally, though?
So price increase is the big concern. It'd be fair to say, I think pre-Christmas, most retailers absorbed their costs, and we saw that in some of the ASX listed numbers, because the issue for a retailer, every time you take a price increase, you risk losing a customer. So they want the volume of sales as well. So they do it, reluctantly, but it's also a market movement. Now you've got so much of a narrative around price increases. Most retailers are now making those decisions to pass those price increases on. 60% of our members said that they would be in the next 3 months. We've got the minimum wage review, which is a significant cost for retailers, particularly if you're a small business, but it goes across all businesses really. So if minimum wage it comes in less than 3%, we've done well, but it's looking more likely to be 3%. The unions are at 5%. But if you look at we used the CPI increase, reviewing from the past was about 2.7%, which was a particular weighted CPI that gave us a longer term view without the volatility. So it's looking around that 3%. So, you know, if you're a cafe, as a good example, and you get a 3% in minimum wage, well, that means, you know, the coffee prices are going to go up. So it wasn't that long ago that we were paying $3.50 for a coffee. It sits at $4.50 now. There's predictions that by the end of the year it will look like $7 for a cup of coffee. So that's the sort of, I think the coffee index is a really good one to give you a sense of where things are moving.
I'd like to know where you can get a coffee for $4.50, by the way, Paul. But anyway, let's move on. You mentioned 29,100 vacancies in the industry. I thought that was a really significant number. So, and staffing is a challenge, as with inflationary pressures in many industries. So just some further thoughts and reflection on that with respect to the retail sector?
Yeah, look, I think there's no doubt COVID accelerated trends that were already going on, which I've talked about, but it also exposed a lot of underlying trends that we may not have been aware of. But I think the retail community were quite surprised on their high reliance on international workers. So I think in hospitality it was well accepted, but in the retail industry broadly, it was certainly underestimated. Now, for a discretionary retailer like a department store, up to 2/3 of their profits are made through November to January because has Christmas in there and also the biggest sale event of the year. Now, what was interesting is that there was 44,000 vacancies back in November last year. So this is a significant issue to solve. It needs some policy readjustment at a government perspective. And what we're talking to government right now is particularly around, you know, the way that they assess pensions and to try and get the older workforce back to fill these vacancies. So it's significant. It's across the board. It's hurting, you know, in retailers of being able to trade to their full potential. So the numbers have dropped since November only because trading is at a different level as we go into winter, but it's a significant issue.
Yeah, and just going back a step, I know you've spoken a lot about this, and it seems like there's a long list of challenges for the members, but just could you just reflect just again on some of the new challenges your members face in this period ahead, probably in the immediate period particularly?
Well, look, they're all battling with this the staff issue. I think there's the inflationary pressures that they're dealing with. So there's no doubt they've got issues around just being considered around price increase, where they take them, where they don't take them. If you're a CBD retailer, you've got significant issues because, you know, according to some reports, some of the CBD, it depends who you listen to, are saying that Melbourne may take 10 years to recover. Now, if you're a premium, to use a department store example, as you would know, those retailers have all their flagship locations in CBD locations. So there's concerns around when the CBD does recover. Now, international borders have come down, but we haven't seen the tourists really arrive yet. And this massive move towards working from home. So there's a lot to be concerned about. On the positive side, we've built up about $240 billion in savings. So there's that money to be spent. Whilst the world's opened up, people are still choosing to remain local. Now, we did a Roy Morgan survey that said that about 60% of people that are travelling over Easter are doing that in their own state. Another 30 broadly were actually interstate and about 3% overseas. So that means that money all gets to stay here. We've got some of those tax offsets or will flow through. And obviously the one-off payments that are coming from the federal budget, if the government gets re-elected, some of that will fall in regardless. That will end up back in the retail economy. So we're remaining positive. The retail sales numbers I've seen have been very, very good, but the overall message is it's an uneven recovery. So it depends where you are, which category you're in. There are some businesses that's definitely hurting. If you're a regional shopkeeper right now, of course, you'd be suffering through the floods in northern New South Wales and Queensland. So it is a bit of a it's not an even recovery, that's for sure. And there's a lot of headwinds to face as we move through the rest of this year.
Thanks, Paul. I've just got one final question, and this is probably a question that you could spend 3 hours to answer. But it's with the election looming,
Yes.
and we've been in election mode for some time. So know that you're more active in this period. I just wanted to simply understand what's on your wish list?
Well, look, it depends who gets into government, because I think it does depend. I mean, look, I'm not going to speculate on that. That's the case. I think there's a lot of, I think if we just talk about the current government, I mean, there's been certainly no indication of tax reform occurring, and that would be really the big ticket item for all of us. So I think there's that issue obviously to deal with right now that we're concerned about. I think that came out of the current budget. If Labor was to get in, I think we're certainly we're probably the big concern we have is this massive move within Victoria around offering a casual sick pay piece, which would have a detrimental impact on the retail economy, because where we're at is currently is that they're planning to trial this, and of course this will end up being an additional payroll levy. So there's a bit of wait and see, and I think once we know who the government's in place, we'll come out with a better position. But we have gone out with a budget submission that talked mainly around climate change and sustainability. So that's the big issue that we think that retailers have. It's our next biggest disruptor. We're not really sure of any government that's taking it that seriously. We're experiencing a lot of disruption right now, and there's more to come. So we think, our biggest wish list item would be a way to address climate change in a much more stepped and measured approach than what we've been doing to date.
That's great, Paul. Look, thank you. We're just coming up to time now. So just once again, want to thank you so much for being our keynote speaker to kick off our conference. So thanks again, Paul.
You're welcome.
All the best.